Hi, and welcome to the Day Trading for Beginners podcast. This is episode 24, and today's episode is going to be a little different because we're sort of combining two topics. We're talking technical analysis. That is sort of the stage that we are at in this journey. And in this sort of second week, what I've personally done is I've studied candlesticks and then I've studied trends and Trendlines. So if you can remember, the previous video was sort of our first discussion about technical analysis. We sort of talked about the difference between technical analysis and fundamental analysis. We highlighted this point that within technical analysis, price discounts everything. So it's sort of all about the price action of the stock rather than, the fundamentals and the balance sheet and, the future growth potential. That's sort of not the things that we tend to look at when we're day trading a stock. Well, the sort of natural progression, at least for me, looking at this stuff, was to first sort of understand these candlesticks. So understand, the main chart. The main chart we're going to look at when we look at price action of a stock is the candlestick chart. So we want to understand, what candlesticks are, how they're formed, what the chart is all about. And then sort of hand in hand with that is trends and trend lines, because those are sort of drawn on the chart as well. And it's sort of like a good beginner sort of stage to, start our learning. But the thing is, you can't really talk about these too much within a podcast. So I thought I'd combine it here, have a bit of a discussion about these, but I would really strongly recommend that you reference the videos that I have on both of these topics. So below in the show notes, or you can go to the Stokes Trades YouTube channel. You can find that on the website. Basically, I have a video about candlestick charts and how to read candlesticks. It sort of goes through like the anatomy. So visually seeing that, it's probably better than me sort of discussing it here, although I will. And then I do have a video that I'm just uploading today about trends and trend lines. So actually drawing out trend lines on a chart and then drawing an actual trend, an uptrend, downtrend, and a sideways trend. So again, I would encourage you to check out the YouTube channel and check out those videos because they are probably going to be a little bit more helpful than this discussion that we're going to have within this podcast. So again, I'm Tyler Stokes from StokesTrades.com. I'm on a mission to become a full-time day trader, and we are sort of doing technical analysis now for the next few months. And again, we've looked at candlestick charts and charting and sort of trends as sort of the first progression into learning all about technical analysis. So as we mentioned before, most technical analysts agree that, price action is what matters most. So watching the price of a stock move is going to be the thing that day traders and swing traders kind of focus on the most. And, you might be wondering, well, what if you could sort of understand and forecast this from one particular chart? Well, that would be the candlestick chart. So you need to learn how to read candlesticks. And again, in that video below, I sort of go into more detail here, but I thought we would just sort of talk about a little few points about candlesticks, and then we'll talk about trends in general as well. So again, when it comes to technical analysis, where the focus is really, really on the short term, the candlestick chart really provides a detailed picture of what's going on in the market. So again, unlike fundamental analysis where we, check out the balance sheet, the future growth potential, what we're doing for short-term trading, we are looking at the candlestick charts and we're understanding them. And, later on, we're going to talk about other things that we're going to use, indicators and such. But for the short term, it's all about the charts. We really need to study charts. We need to know how to read them, how to draw lines on them, to be able to forecast future price movement. So it's very much different than fundamental analysis. So eventually what we want to do is not only understand how to read a candlestick chart, but we want to be able to recognize what are called candlestick patterns. So that's going to be a big focus later. And it's something that, all technical analysts sort of know. They can understand these patterns in the candlesticks, patterns in the chart, to be able to recognize them, see them, and then potentially act on them. So just, very briefly, again, listening about this is not as effective as seeing a diagram or a video. But a candlestick, it is a measure of the stock's movement on a specific time frame. So you can get a chart that shows you candlesticks that represent every minute, every hour, or every day, or even weeks. So each candlestick can be representative of a specific time frame. So that's important to understand, because as you look at a chart, you can look at how the price is moving on a short-term basis, or a medium, or even a long-term basis. And then basically these candlesticks have a representation that shows what the price of the stock opened the day for, what it closed at, and then what its high and lows were. And basically, once you understand the anatomy of a candlestick, you can sort of see the picture of the price action moving throughout a given time period. So, it's more than just patterns. As we explore more about technical analysis, understanding and predicting future price movements based on past data is really what we are trying to get at. And then the candlesticks really enrich this analysis by providing very clear indications of what is happening. So they're not just, simply, markers of price changes. They're really, narratives of the market sentiment, showing not just where prices have been, but sort of hinting at where they might go. And, if you don't believe that yet, or that doesn't quite make sense, once you start studying this more and you see a few more examples, and then you kind of look back in history where you study some patterns, and then you see what happened next, certainly hindsight is 2020, but it can very much these patterns reemerge, and history certainly does repeat itself. And you can understand that from just, studying this for, a short amount of time. So that is the candlestick. And again, reference the video below. But really, I would stress that learning how to read these charts, then eventually we're going to talk about all sorts of candlestick patterns and whatnot. It's going to be very important. It's what you must do. Really, the candlestick is sort of like the language through which the market speaks, and it offers you insights into, the mood of the financial environments, helping you to decode complex market signals. So by mastering the candlestick and eventually various patterns, what we are essentially learning is, how to listen to what the market is saying. And I know that sort of might sound, a little silly, but it's true. It's sort of like an art. Some people relate it as, it's an art, piece of art, and, the candlesticks are just flowing, and you looking at that really speaks and tells a story, allowing you to anticipate movements and react. So it's certainly, there's science and there's also art to this. And that's just one sort of take on these types of charts. So I would highly recommend that you not only reference my video for candlestick charts, but certainly check out YouTube and check out some other good resources, because that is something important to do. And then once you sort of have the candlestick chart dialed in, you know what it is, what makes up the chart, and you can read sort of the anatomy of these candlesticks. Again, once you sort of watch that video, or you watch a few videos, it's going to click. It's not complicated at all. Next, what you want to do is you want to understand the trends that are happening within the chart that you're reading, and you want to be able to draw trend lines. And then eventually, once we learn more about technical analysis, we start studying some strategies, and we start learning how to put some of our toolbox tools together, we're going to be able to come up with a strategy, and things are going to make more sense. But basically, what we want to next talk about is the trends and the trend line. So again, in our first discussion, we highlighted like the three main principles of technical analysis. And that was, price action discounts everything. We talked quite a bit about that in our first episode. And the second point was that prices move in trends. And then third point was history repeats itself. So price action discounts everything. That is what the candlestick chart will do for you. Mastering that, you can watch the price action as it plays out. And then next, what we want to focus on is that the prices move in trends. So we need to really understand what a trend is and how we plot out these trend lines on a chart. So in, the simplest terms, a trend represents the general direction in which the stock is moving. So trends can be categorized into three main types. You either have an uptrend, you have a downtrend, or you have a sideways trend, and those will tell you where the stock is moving. So an uptrend, a little self-explanatory here, but it is defined by ascending peaks and troughs. So again, there is a video that I have about this that can help you visualize this. But peaks and troughs basically refer to as a stock goes up and it hits a relative high point and retraces back a little bit, and then touches a lower point. The first one there is a peak and the second one is a trough or a high and a low. There's various ways to say these things, but an ascending set of peaks and troughs, meaning that there is a high and a low, followed by a higher high and a higher low, followed by a higher high and a higher low. So you can see that it's a zigzag sort of pattern that's extending up into the right. So up trend lines are drawn along the lowest lows, confirming an upward movement. So when you draw a trend line on an uptrend, you're grabbing all the lowest lows, and as they progressively rise higher, you draw a line that touches the lows getting higher. So a downtrend is basically, the reverse of that. We're talking descending peaks and troughs. So, you've got a high and then you've got a low and then you've got a lower high and a lower low. So we've got a zigzag pattern that's sort of going down and to the right. So we've got a trend that is trending down, and the way stocks move is they move up and down, retracing a little bit. And that's why you'll always have, these zigzag patterns within a stock price. So the peaks and the troughs are getting lower and lower. That is an indication that you are in a downtrend. And then a sideways trend is sort of also referred to as just trendless or a horizontal trend. So that's where you've got your peaks and your troughs, so your highs and your lows of a stock sort of moving horizontally or moving sideways. So that is sort of what trends represent on a stock chart. So it's important to, hear this, but maybe, you yourself draw these out, watch a YouTube video so you can kind of get a good visual of these and drawing these out, really understanding them. It's actually pretty simple, but it's always good to just kind of manually do it yourself, in my opinion. So now once, we can visually see a trend on a chart, by noticing, higher highs or lower lows, basically we need to draw lines to be able to analyze the chart better, to make predictive future moves on where we think the stock price might go. And when I was studying this, I came across this quote that I'm going to read you. It's from Harry Seldon, who is the founder of the Real Day Trading Reddit group. And I was watching one of his videos, and he said, "Without the consensus of the masses, technical analysis is meaningless." And I thought this really stuck with me because it emphasizes how important it is for us to really be able to draw trend lines properly. So using trend lines effectively means following methods that are widely accepted in technical analysis. So this ensures that the lines you draw are recognized by most other market participants, including big institutions, but other retail investors like us. So when many traders agree on the same trend lines, they become much more reliable because more people are acting on them. And this consensus makes trend lines a powerful tool. So if you just think about it, if you're drawing trend lines and you're drawing them sort of incorrectly, or you're making them up, or you're just kind of doing your own thing, well, no one else is using those lines. Therefore, no one is going to react to what you see. Therefore, the probability of your predictions on the future movement of a stock aren't going to happen because no one is using the same tools as you. No one is seeing what you're seeing because you're drawing these lines incorrectly. So that just really struck home to really, hammer home this point that you need to be able to draw these trend lines properly. You need to be able to do them properly because that's what everyone else is doing. That's what everyone else is trading on. And that's how the market is going to move based on, these tools. So if you're using the wrong ones, then you're sort of just doing some random stuff alone, and you're never going to be able to predict the movement of prices accurately. So very important. I just thought that was worth kind of sharing. So in terms of, drawing these trend lines, we first want to talk briefly about just a horizontal line. So it's not always referred to as a trend line, but basically there are horizontal lines that you can draw on a price chart. And they're going to be able to tell you some important things about what's happening with the price chart. So horizontal lines basically are a fundamental aspect of technical analysis, and they are used to identify just a static price point that really signifies some support and resistance levels within the stock. So unlike trend lines that, as we will see and we'll talk about, they slope with the flow and the direction of the price movement. So you're drawing a trend line on the lows as they get higher, or on the highs as they get lower. A horizontal line can cut through candlesticks, and it's just a line across the chart. And, it's drawn to show, some trading ranges that might be apparent within a stock. So, it can help identify a range that a stock is trading in. So many stocks will have these levels of what are called support and resistance, where, it touches on these levels and it just continuously, can't get any higher, or it comes down, and as the stock is falling, it meets these support levels and it doesn't drop below them. So you can draw those out on a chart, and it's going to help you visualize these lines. And then as you draw trend lines with these horizontal lines, it's going to help you just have better analysis on a particular stock. So what they can also do is they can also tell you some entry and exit points potentially. And they can tell you that, if a stock, breaks through what has normally been a strong resistance line, you can see that throughout the history of this particular stock. And if, price seems to break through that horizontal resistance line, then, that could be a clear signal that it is up and it's going to travel up to the right and it's on a big uptrend. Or, if there's been a level of support and you can notice it through a horizontal line on the chart, and this stock falls below that, well, that might be, an indication that the stock is really suffering. It's going down. You might want to short that stock. So again, horizontal lines are key, and they sort of give you, a big picture on, where a stock lives, so to speak, in terms of the price range that it is trading in. So that's horizontal lines. And then in terms of actual trend lines, again, to draw these out, I would recommend you watch the video, but we'll talk about it here briefly. The first thing that you want to do when you are looking at the chart and you're about to draw a trend line is you want to just kind of identify the trend. And, once you see some examples and you see some pictures, you'll be able to see this. It's quite, it just takes a bit of common sense. You can kind of see when the price action, all the candlesticks are either, moving up to the right, or they're moving down to the right, or they're moving sideways. So you can visually see a trend for the most part. And then what you want to do is you want to sort of connect the dots, so to speak. So if you're going to draw a trend line for an uptrend, then what you would do is you take your line and you would connect the least two lowest points on the chart without cutting through the body of the candlestick. So you would find a low point and you would extend that up to another low point on a candlestick, so the wick, and you would extend that line up to the right in the most natural way that you can. And then when you're doing a downtrend, you would find a peak and you would start your line there, and then you would find the next lowest peak in that downtrend, and then you would extend the line out to the right in the most natural way. And you do not want to have your trend lines actually cut through any candlesticks. You want to just touch the tops of the wick. So you go from tops to tops when you're drawing a trend line that's in a downtrend line, and you go from the lows to the higher lows as you're drawing an uptrend line to the right. You wouldn't want to draw lows to highs or highs to lows. And you don't want to draw your trend lines too steep either. These angles should not be too small. And then the other thing to consider is that the longer the line, generally the more, powerful and more stronger that area is. So a long trend line, with many touches on it, is sort of indicating a powerful support level or a powerful resistance level. So again, listening to that, whether everything's sort of clicked there or you just got one little nugget from there, I would recommend that you check out the video. But the bottom line here is that trend lines, it's important to know how to draw them. You don't want to draw them through candlesticks. You don't want to make them too steep. And when you're doing an uptrend, you draw it at the bottom. So you draw it on the lows as the lows are getting higher as the stock is rising. And then for a downtrend, you draw the trend line on the peaks. As the peaks are falling, descending, the trend line will go through the top of the candlestick. So now in terms of significance, again, we've kind of touched on this a little bit, but trend lines, they're going to show support and resistance levels. And we're going to talk all about support and resistance in a future episode. But basically these trend lines, they're going to help you predict areas where prices might find support or resistance. So they might, as you're watching this and you're seeing a stock play out, if you've got these trend lines there, you might understand, you might be able to see where a stock is going to enter an area and come back down or fall and be able to retrace back up through, resistance and support. These trend lines can help you with where you want to pick some entry and exit points for buying or selling stocks. And then they're just confirmations of a trend as well. So, it's just a visual confirmation on a chart that yes, we are in a uptrend because there's the line going up to the right, clearly rising as the prices of the stock has gone up over time, or, you're clearly in a downtrend now, and the line is clearly indicating that. It's a good visual representation. And then that's going to be important to know, in terms of you making decisions when it comes to trading. Now, the last thing we want to touch on is there's always going to be some classification of trends in terms of timelines. So when you're sort of analyzing market trends, it's important to understand that trends, they're going to be classified based on duration. And it's not always going to be, everyone doesn't always agree on the exact same time frame, but there are sort of three main classifications: major, intermediate, and minor trends. So, major trends might last for, a longer time, like 6 months to a year. And these long-term trends sort of reflect the broader market. And, it's influenced sometimes by fundamental factors as well. So, if you're in a bull run, and, it's a major trend, everything's up to the right, and it's been going that way for a year, that's the major trend that particular stock might be in. But within, a major trend, you can certainly have intermediate trends or minor trends. So if a stock is going up and it's been going up all year to the right, it's in a major trend, an uptrend, certainly within that year, there's going to be periods where the stock is, retraced a little bit. And that could last, a few weeks to a few months. And that would be an intermediate trend, or, a few days to a few weeks. And that would be a minor trend. So it's important to know that there are these different classifications of trends, and you can draw those out on the charts as well. You can certainly have a stock that, from the beginning of the year through the summer has gone all the way up and to the right, but, there might have been a month there, maybe in April or May, where the stock clearly was in a downtrend that lasted maybe just 3 or 4 weeks. So that's important to sort of know, where you stand and where the stock is in terms of, just having that proper information when you are looking to make any sort of trades. And then you might be wondering, sort of goes on with that point, is that, if we're day trading and everything is short term and price action is everything, why are we even concerned with these long term trends? And it was a question I was kind of wondering. So I looked into it, and basically, long trends, such as the major trend that we just talked about, they are still important for us day traders for several reasons, even though, we are all about short-term price movements, there are many sort of key factors to consider regarding the importance of you just knowing the long-term trends or what major trend a stock might be in. Certainly. So in terms of context for short-term movements, I've heard this several times in the 4 months that I've been studying day trading, and that is that it's important to know the broader market and where you stand. So, what is the market doing? It's sort of like a question that a lot of successful traders ask themselves before they start looking into everything. What's the overall market trend doing right now? And that's going to provide context for, short-term price movement. So if, the broader market, it's in a long-term uptrend, then, a day trader might prioritize certain longer positions, knowing that, the general market sentiment is bullish. So it's always important to know what the market is doing, even before you're making some short-term trades. So, the context of the whole broader market certainly does matter. And then there's this idea of trend alignment. So, trading in the direction of the major trend, that can be a profitable strategy for success. For example, if a stock is in a long-term uptrend, there might be some short-term pullbacks that can be seen as buying opportunities. So if you didn't know that you were in a long-term uptrend and, you saw some pullback, well, you might be making wrong decisions. Again, it's important for you to probably have the full context of the long-term trend, even with short-term decisions that you might be making. You can talk about risk management here and why it's important. Knowing the longer trend might help manage your risk. For example, if the long-term trend is upward and, as a day trader, you might want to avoid, going short on some pullbacks within a trend. Just knowing that you're in that trend, you might not want to risk shorting a stock if you're still in an upwards trend. And that's going to reduce some risk to your portfolio. Again, once you understand strategy and you understand where to see something that's a clear breakout or a clear reversal, then, that point won't be valid. But certainly, just managing your risk, knowing the trends in the long-term view is going to be helpful. Support and resistance levels. So major trends will help identify key support and resistance levels. And again, these levels derived from the long-term trends, they can act as significant points of price reversal or consolidation. So in the video, we had this chart on Amazon that we looked at, and we noticed that the price level of 100 was, a key support, level over, the last year or even longer. And then once price dropped down to that level, and then broke out from it again, that's a clear indication that you're back on a uptrend. So, knowing the long-term support levels within a major trend can help you with some of your short-term decisions, especially if some of those prices and some of those support or resistance levels get broken. That can be something important. So it's important to even know that when you're watching sort of the day-to-day price movement. Market sentiment, we sort of talked all about that. And then I think an enhanced strategy development is going to be apparent when you sort of know the trend that you are in. In the the first 4 months of studying, I've also seen that it's certainly important not to get, too much information. You don't want analysis by paralysis and too many indicators and too much information. But certainly, having a balance and just knowing the actual trend that you are in is certainly going to help. It's going to be an important factor in your short-term decisions, even though it's important also to not get bogged down with too much information. So I think we'll wrap it up there. Thanks so much for listening. I hope this was informative to listen to. I know it's a bit of a different episode here. We're kind of choppy with what we're talking about here. It's just the nature of the things that we're looking into at this time of this journey. We're doing candlestick charts and we're doing trends and trend lines. It's a little bit harder to discuss in a podcast. Certainly you will want to check out some images of these things, check out some videos, and I will include those below in the show notes. So thanks so much for listening to this podcast. In terms of what we're doing next, I think we're going to talk about support and resistance levels. We talked a little bit about it today, but certainly we want to talk about it in greater detail. And then we're going to move on just to, we're going to just knock out these components of technical analysis week after week. So stay with us, subscribe to the channel, and certainly consider joining our free community on School. I think we're up to, quite a few members now. More people are talking, more people are sharing in the discussion. So that's going great. So I look forward to chatting with you there, and I look forward to talking with you in next week's podcast. Thanks again, and we will talk soon.